The US dollar is enjoying a rare period of weakness, much to the pleasure, you can imagine, of Donald Trump, who has long sought a little bit of softness in the greenback. But as far as the charts are concerned, this is starting to make things a lot more interesting. One example of this is against the Australian dollar. And as you can see on the chart in front of you right now, we are potentially seeing a breakout forming that could make life a lot more interesting for this chart. Now, this is a pair that has been long in decline, but this has been a very gradual decline at times throughout this period. Now we're currently trading around the kind of 69 level. Now to the downside, 68 is an interesting level of support. It's where we found support during the recent incline in this currency pair, but above it to the 69.50, 70 level, which is really interesting. Now this is a chart which has long been in a position whereby if we did see a breakout to the upside, then things could start to look a lot more interesting. You can see the descending trend line on the chart there, which highlights the level which we've constantly failed to break through during the down period in this pair. But now it looks as though this is coming under a little bit more pressure. We are seeing consolidation after the most recent test, but we're not seeing a strong pullback, and I think that's really quite interesting in this case. Now, as we always know with the US dollar, people have been calling the end of its peak for quite some time. People have been suggesting that it's too strong, that it's due a corrective move. And every time this is called for, we see a little bit of a pullback and then it surges back to those peaks. We can't get around the fact that the US dollar is still the world's reserve currency, that the US dollar is a safe haven currency, and more importantly that the US dollar is particularly a safe haven currency at this moment in time because interest rates in the US are still high. So we're still seeing treasury yields that are far outstripping those that we're seeing in other markets, be it across Europe, the UK as well. So what we're actually seeing right now is every time we do see moves for safety, the US dollar is quickly sought upon, which moves it back to those peaks. So this is always going to be a currency that's going to be vulnerable to upside, which in the case of the Aussie dollar US dollar pair means there's always going to be vulnerable to the downside. But at this moment in time, we are seeing a little bit of softness in the US dollar. Potentially, we are seeing the fact that we are seeing a little bit more risk appetite in the markets is helping that. We are seeing progress on the US-China trade war, which is seeing a few of those long US dollar positions unwinding in the process of that. We've also seen 3 consecutive interest rate cuts from the Federal Reserve, again lending itself to a little bit of softness in the US dollar pair, and some of the economic data we're even seeing has been improving slightly. That is all leading to higher risk appetite. But as I say, what we need to see now is a move through that 69.50, 70 level. That'll break the descending trend line. That'll take us through a key psychological barrier and potentially could give the catalyst that this pair so desperately needs for a move to the upside. One thing I would caution though is any move to the upside may come at a bit of a slow pace than what we typically see when we see these kind of technical setups. And the reason for that is what I've already alluded to. Very quickly, people do rush back into the US dollar during times of risk aversion. We still live in very uncertain times. There's still plenty of downside catalysts that could prevail over the next couple of months, be it movements in the US-China trade war which move away from the Phase 1 agreements. For example, over the last 24 hours, China has insisted that it wants the US to remove far more of the tariffs, closer to $350 billion of tariffs in exchange for a Phase 1 agreement. The US is currently looking at around $112 billion. This could potentially be a deal breaker, as it was as we saw in a similar situation earlier on this year. So things can unwind quite drastically and quite quickly in the markets, and that could see a lot more favour for the US dollar once again. But what we're currently seeing from the charts is a lot more optimism, and more optimism seems to be lending itself to a potential breakout to the upside.